What's going on, everybody? It's your boy C-Zar, and we are talking about Bitcoin during this historic past like 10 days or so, where Bitcoin has run up from 63K, just below 63K, all the way up to $81,000. What an absolutely monumental run, and a very defining run in the overall structure of Bitcoin. The bear market has officially ended. Now, a lot of people are taking this as a moment to say that the bull market is starting, and maybe it is. Maybe it's not. Maybe we are in this lagging phase crab market. Maybe the bull market is starting, but we're still going to be here for a while, and we're getting higher lows and higher highs, but we're still going to be in this general area, going into 2027. We're going to answer all these questions and more, hopefully, by the end of this video. But I really want to take this as an opportunity to reflect on what this moment means now and what it has meant in the past. So take a walk with me. Let's get into it. It's the 26th day of August, and here we are at $78.5 thousand. Hit that like button, subscribe. Thank you all, and let's get into it. Okay, so here we are. Here we are, right at this very, let's say, in hindsight, it's a very obvious point in Bitcoin's history where the bear market has definitively ended. Okay, there's still time. There's still the possibility that we could reject. This could be a giant trap. We could go lower. I'm not going off of that perspective. Personally, I don't believe that's going to happen. It never has before. It could happen now. It is possible, but I personally don't believe that that's going to happen. I think that if you're wanting Bitcoin below 60K, let alone below these lows here, it's a pipe dream. It's an immense desire that the big dogs are not going to let you have. There's people who want to buy this thing $5,000 cheaper, let alone $10,000 cheaper. You're not going to get lower prices likely. Anyways, we're going to get away from that. I want to compare this moment here to this very definable moment here. Same kind of place that we were at last cycle at the end of the bear market. We go to the prior bear market to that, and it's equivalent to this here. Again, there's this moment where you don't know, are we still in a bear market? Are we not? We think we're in a bear market, but then boom, then a move happens like this, right? Are we in a bear market? Are we not? I don't know, but then a move happens like this, right? And people still think that we're in a bear market, that we're going to go lower, and they're being proven wrong all the way up. But there's that defining moment. Here in this cycle, I would say that defining moment was probably this week, because you got above that high. It wasn't as big of a pump as what we experienced last week, but that was still a defining moment right there. And then, I don't know. This was all part of one big bull cycle, so we'll just have those iterations to go off of, okay? So in analyzing these pumps, the thing that I want to do first is analyze what the drawback was. Because I've seen a lot of people, a lot of analysts whose opinions I deeply respect, who I just simply disagree with. They're saying that we're not going to go below 70K, that we're probably going to keep pushing from here, and that we will likely go above 100K or something like that before we stop. And maybe we do. I'll tell you what. If we go above 100K, I mean, first we're going to have to get above 81K, but that'd be pretty impressive. If we can get above this high, I'll start getting on board with the idea that we can get to 100K. We'll talk about what that possibility looks like later in this video. But for now, I want to keep it focused on this, okay? The first thing that I was talking about was, what is the drawback like? Imagine that you found the top, right? This is that definable moment. This overall right here is that definable pump, but I would say right here this week, that's whenever it was a definable moment that the bear market was in fact over. Maybe it was this week. Maybe for some people it was this week. Double bottom, nice move up. It could have been any week in between, but for me, that's a definable moment on the chart. The initial pullback that we saw was a 40% pullback. Now that's extreme. That's very extreme. I'm not forecasting, nor do I expect that we will drop even half that from the current price. But just to show you how extreme things can be, 40% pullback. This, by the way, is what kicked off the bull market right here. Even though we kicked off the bull market, we still moved sideways from November 2015 until May 2016. Okay, we still moved sideways for like half a year. And in that sideways, we had 40% pullback here. We had multiple drawbacks as time went on as well. Here, we have this definable moment. And we did keep pushing. We kept pushing on, but we did consolidate first for about a month. Nice high and tight consolidation. And in that consolidation, from a high point here to a low point there, we did see a 14% drop at some point. 14% drop. 14% 40%. We go to the next one here. And did you keep pushing higher after this definable moment, after this definable week? Yes, you did. But not much higher. And you moved sideways again for this time a couple of months. From a high to a low there, you had a 22% drawback. So 22%, 14%, 40% drawback. That's what we've seen historically for Bitcoin. That does not mean that we have to drop 14%, 22% or 40% now. Maybe we do. Maybe it's something different. Most likely it's something different. We only have 3 iterations. The odds that we're going to get a definite, definable average of what this drop is going to be is not likely. But what we can say is that there has, at least even here in this insignificant level, been a 14% drawback. By the way, when you keep pushing like this, notice how whenever we pushed up initially, you consolidated for half a year before actually moving higher, right? Here, you did not consolidate. We'll go over what that meant, right? Here, you consolidated for a few months or a couple months, but then really in this overall area, you consolidated for like half a year again, right? For a long time before the bull market really kicked off, before you really started to see some strength come in. There's this long accumulative phase here. Here, we did not have that. And what happened as a result? We saw a massive pullback. Now, this drop is a black swan event associated with the COVID crash, absolutely. But this drop was not. This drop was not, and this drop was not, right? We still saw incredible drops, even from the lowest point here, or the highest point, that's a 34% drop. That's a 47% drop. That is a 53% drop there. All I'm getting at here is that we're going to see a larger pullback. It's going to be more volatile to the downside if we do just move up in a straight line. So for the people who make the argument that I don't care how low it goes, it's not going to go lower than these lows, so I'd rather just buy here, or if it's pumping, I'll just buy on the pump. It doesn't matter if it comes back. The argument there is if it keeps pumping and you're buying on this pump, it will likely come back to test these exact levels, if not even lower. I don't care if we go all the way up to 120K from here. We probably do see some wicked volatility if we make that kind of run. We've seen it happen before. It has not benefited the price. And then on top of that, not only did we pull back, but from this point here, when we got the high, when we retraced like 80% of this move overall in just one fell swoop, it took us 490 days, over a year, like a year and a half almost, before we saw new highs. Not only was it a large drawback in price, it was a large drawback in time as well for the bull market. We had a stagnant period for so long. And it wasn't necessarily stagnant. There was some volatility. But you get what I'm saying. We didn't get a higher point than that. So I'm hoping, not because I'm greedy, not because I'm desperate for lower prices, not because I wish I bought Bitcoin below 60K, damn it, no. I'm hoping we don't keep running up here because I don't want to deal with the aftermath to the downside, and I don't want to deal with the aftermath on a time-based constraint either. I want 27 to be in good shape. I want us to form good structure, where the longest that we consolidate is 4 to 6 months, 3 months, and we could be at that point now. Every time that we've seen this beginning pump, we've seen at least a 14% drop, if not at most a 40% drop. Just to put it in perspective, from here, the high, a 14% drop would take us right about there, right down to $69,000, just about 70K, which, by the way, from a low to a high, takes us just below the 382. That's a pretty common area, pretty standard area to find support at in the fib retracements. We go here, from your all-time high to your low here. And then that's also back at the 236. It's very common in these retracements to go find resistance at your 382, sometimes just above, like what we're doing now, and then you pull back to your 236 and you find support there, and then you rally up to your golden ratio. That's actually a very standard procedure, one that if we saw a 14% drawback from here, we would see happen. It would make sense. 14% from here would take us right to this key level of support in the fibs. Now, as far as price action goes, it doesn't seem like it's that key of a level relative to this bar here. There's nothing really in the way. We just move straight up. But if we put a line right there, you can see that's also back at prior very significant resistance here. Very significant resistance based on the all-time high from 2 cycles ago, 2 bull markets ago. It's just a significant area. Even here, relatively speaking, based off the fibs, it's significant, let alone the price area itself. Maybe we go lower. Maybe we don't stop at 69.5K. Perhaps we go lower and we find support at 65.8K. I love you. Thank you. 65.9K could be the price that we go to. Maybe we don't. Maybe we don't find support at this level. We find support down at prior areas of resistance here and prior areas of support right there. And if we measure this from a low to a high, that does take us right to our golden ratio of this Fibonacci retracement. So there's a lot of sense to be made. In other words, there's a lot of sense to be made between this like 65K and 70K range. And here we are at 78K right now. All right. It makes a lot of sense that we probably pull back there. After all, that's what we've seen the last 3 bear markets in a row. We've seen some kind of dynamic pullback, and 18% to 14% is on the lower end of that. My opinion being that we've seen the weakest bear market in Bitcoin's history, and it might not even be a bear market at the end of the day. Maybe this is just a correction in an overall bullish super cycle. Who knows? I mean, with what we've got here, it is possible. It is definitely possible that this never was actually a bear market, just a correction. What was I going to say? With the fact that it's weak, this could be, it would make sense that this is one of the weaker drops that we've had here. 18% to 14%, that will be one of the weaker drawbacks that we've seen in the last now 4 bear markets. So something like that makes sense. Just because it makes sense doesn't mean that we have to go down. Sure, we could keep pumping, but I'm telling you, man, we keep pumping from here, the drawback will be bigger. It will likely be bigger, not smaller. It's going to be a bigger drawback. And I would say, not financial advice, not a financial advisor, but even if the price does go up, I would bet that the price pulls back to these exact areas, if not lower. So it's probably not worth the headache. I would just wait for that re-entry, be patient. There's a lot of people who think that you're not going to get the chance for a re-entry, but I really hope that we do, because I think structurally speaking, that would make more sense. That would be more sound. If we don't get the re-entry, that means people are just buying on emotion. It's FOMO, it's euphoria, it's panic, and that, again, that screws us up. We've seen it happen before. So just addressing both sides there. Looking at this in the scope of, if we don't stop here, where would we go? From a high to a low, you know, the next target area would be the 0.5, and Bitcoin has shown a lot of significance to the 0.5. If we don't stop at 81K, we might rally to 85K. If we don't stop there, you know, during that one cycle where we did the 2019 rally here, where we did just blast off, we went all the way up to the 786. If we were to go to the relative 786 here, that would put us all the way up at $106,000, and we'd probably get there by the end of this year. Again, a massive pump like that would result likely in a significant correction that I would at least expect to take us back to this area. Prior resistance here, prior support. So it might be fun to watch, but there's no reason to FOMO and buy. I really would advise, and this is not financial advice, but I would really suggest and advise restraint, patience, and then proper execution whenever the time comes. I want to see... Here, let me actually do this. I'm going to bring it all back, all the way back until we get the vertical lines. There we go. We got the vertical lines now, I think. Yeah, okay, so here's the RSI. So the RSI here, at that definable moment, was finding resistance at the overbought zone. We're pretty close to doing the same thing here. We go back here. Is that the only one that we have? We don't have any more. Did I get rid of all the other vertical lines? Let me see. I guess I did. Nope, that's not what I meant to do. There we go. RSI here, just overbought instead of just under the overbought zone, but still in that general area. And the RSI here, it would have been here April 1st. April 1st right there. So that was here, just under the overbought zone again. So still in this kind of localized area that we are in now. We are a little bit lower than what we've seen historically, so maybe we do push higher. Perhaps we do. It is possible. But again, from here, the highest that I'd want to see us get to is maybe 85K, maybe that 0.5 resistance. If we can get up there and it's a fake out, something like that, we come back down, I don't think it's that big of a deal. But again, if we push higher, we're going to see a bigger drawback to the same levels, to the same price area at the end of the day, but it's a bigger drawback if we go up higher. I hope that makes sense. Anyways, going over all that, I hope this gives you some things to think about as far as what might be next. I am forecasting a drop. I do expect that we're going to see some type of drop here, a pullback to this 70K, 65K area, maybe even a little bit lower. What I don't expect, and actually if we go back and we look here, why is it Trading View's being weird, guys? It's not letting me pull it. It's so weird. Let me see. It's like if I grab from down here, it won't let me do it. I have to grab from up. I don't even know where it is. Anyways, if you notice here, you know, from a high point, we did drop pretty fast, but it took 3 weeks. It wasn't a 1 week endeavor. It was a 3 week endeavor, and this was after we'd already been moving sideways for about 4 or 5 weeks, okay? We go back here. Whenever we dropped, it wasn't a quick shift down. It was we were in the midst of a sideways consolidation phase. Whenever we dropped here, this was a quick shift down. But again, Bitcoin was a little bit earlier in these days, 40% drawback. I don't expect that to happen. And then just as quick as we dumped down, we moved back up. So what I'm looking for here is one of two things, right? Either a slow shift down that's really not that significant, but maybe over the next 3 to 4 weeks, we see that. Maybe even over the next 6 weeks, we see that. Going into late September, if not early October, I think that we make our pullback. So it's not going to be that we're at 78.5K and then tomorrow you wake up and boom, we're below 70K. I don't think that that's going to happen. If that does happen, what we're looking for, like that 1 year, is some quick volatility. We want to come back up. If we go down fast, we want to come back up fast. We need to find support and do it quickly. We need to show that there's demand. Because if not, we run the risk of this being a trap, and we don't want that. So avoid, hopefully, the fast drawback. And what I would expect, what I'm calling for, is that, again, over the next, let's say 4 weeks, 4 to 6 weeks, 3 to 6 weeks, I would expect that we see a drawback to something that is around 70K, 65K, somewhere in this area here. And then going into October, I think we will see some expansion. We'll see some growth. And this is unrelated to what we've already compared in prior cycles. This is unrelated because this is specifically related to the midterms. I think that we're going to get a bullish October relative to the midterms. And in fact, maybe we can do something about that. We can figure out a way to do that. Let's see here. Hold on. Cyclic lines. You know, November, it's like the first week of November, right? Isn't that the voting time? 2026. You go back 4 years. 2022. Right? November. I guess, yeah, 4 years. Wait. Was 2021 an election year? Like a real election year? Or was that a midterm year? It would have to, if it's 4 years, it would have to be here, right? Because 2 years ago, 2024, that was whenever Donald Trump got elected, which would have meant 2020, yeah, okay, yeah, it was 2020 that the election year is. So 2021, it was 2019 that the election year was, but 2020 that he got inaugurated, Joe Biden did, and then 2021 is the midterm year. Is that right? No, 2020, if we're in 2026, it would be, I'm sorry, I'm doing my math all bad. It would be 2022. My bad, guys. I'm sorry. Some people probably figure that out right away. Time math, it gets me. I don't know why. Time math just gets me, guys. Okay, so November 2022. So midterms, okay. So we did actually pump going into midterms a little bit, but we were still in a bear market. So we dumped down. That was the end of it there, whatever. Crypto didn't get any love. Oh, wow. Midterms here then, 2018. We saw some nice dropping. Historically, it looks like midterms have not been too... I guess you pumped going into it here a little bit. A little bit there. Here you dumped. Wow. Midterms have actually been bad for Bitcoin, apparently, every single time. Let's just get this all on. Midterms by year. I don't know. Let's say last 5 midterms by year. I don't know. 2022, 2018, 2014, 2010, 2022, 2018, 2014, 2010. Yeah, it all checks out. Wow, that's kind of wild. Again, this is probably the best case. This is the only time that we've gone into a midterms where the bear market is debatably, and I would even say definably, over. Definitely over. It's not perfect. We don't have a higher high or a higher low yet, but man, I wonder, do we actually dump going into midterms? Is that what we're going to see? That'd be interesting. Maybe if midterms aren't what the market participants were expecting, what they wanted, what was desired, then we do see that. Maybe that's what it is. There's some disappointment around midterms, at least for speculators in these markets. Maybe this time we get some excitement, some surprises, some pleasant things happen, and we pump going into midterms. Pump going into midterms. It's actually after midterms. If we notice here that we see the pump, let's analyze that real quick, and then we'll wrap this video up. Okay. Midterms here. I'm guessing, right? November, first week of November, basically. November 6th. So basically in that time right there, we take this. We started to pump, we started to move up 4 weeks later, like within a month. Here, we did not start to move up really for quite some time. We didn't start to move up. And I mean, even then we were below. We didn't start to move up for quite some time. We were at the end of that bear market. It wasn't good. So that's a potential outlier there. From here, we we didn't start to move up for quite some time, nearly half a year there actually. And we were, even when we did start to move up, we were still lower there. And then here we did start to move up about 9 weeks later. So if we are bullish after midterms, it's a 4 to 9 week period that we're bullish, and if not, it can be like a half year or longer, apparently, based off of historical data. Again, I'm not expecting the same result. We're already seeing different things here than we've seen in prior cycles related to midterms. But it is interesting that every time going into midterms, Bitcoin has actually been in its bear market and it's actually dropped. We've actually seen some bad price action, right? Like that was the lows last cycle. The time before that, we dropped. The time before that, sure, we pumped into midterms, but we dumped going out of it. This time here, we dumped for about like 2 weeks, out of midterms there, and then we pumped 2 weeks later, so at least a month before we saw any kind of upside. And that was even in the midst of a bull run. That was in the most massive bull run we saw for Bitcoin. We still got a drawback during the midterms. Kind of interesting. Can we break the cycle? See, my whole theory has revolved around the idea that we'd pump going into midterms, but maybe we don't. Maybe we have a slower drawback and then midterms comes along and we just dump down to 65K. Either way, I'm still expecting 65K to hold. We could go a little bit below 65K. How much could we go below it? Let's see. We could go to like 64. If we went to 64.2K, I think that's okay. Wouldn't want to see us go below 64K though. And the way that we do it matters. Again, slow is fine. Slow is fine. Fast all the way back down here, I'd rather not see that. I'd rather not, next week or the following week we're down there. I don't think that would be good. So over the next 3 to 6 weeks, let's see if we can make our way down, pull back, as we have historically in these kind of environments. We are, after all, at an area where we found resistance and support before here turning into resistance. We are, after all, from our all-time high to our cycle low. This is a very significant Fibonacci retracement. We are right above the 382. We close below here. The statistical probability that we pull back to the 236 to find support is immense. It might make sense that we find support here. Everybody's going to expect that we go here because it's the most obvious zone relative to this little bubble that we're in, but they're going to overlook the fact that this is actually a very significant zone, both based off of fib levels and off of prior price levels. Resistance here, resistance there. From an all-time perspective, this is 69K. Even though it's an innuendo, it's a very significant number. And I think Bitcoin's going to prove that over the next 3 to 6 weeks. If my assumption is correct, we should see a bullish October. But as we've just seen, midterms can be a little bit tricky, I guess. We'll see if we can break the habit, or will midterms actually provide some downtrend. Let me know what you guys think in the comments. Are we going to pump into midterms? Are we going to break the cycle, or are we going to follow the cycle? Are we going to actually dump after midterms or even going into midterms. Hit that like button, subscribe. Thank you all for being here. I'll see you on the next one. Take care of yourselves. Bye-bye.